Well, good morning. Looks like we finally got some red action. Doesn't mean a heck of a lot to us, but you can get a sense that stuff is starting to break down a little bit, but most of the people that are going to start worrying are the ones that have way too much of their accounts in any one product. So there's a lot of people using stops are getting a little nervous. We're just basically going to look down through the account. I do this pretty quick because I have a lot of accounts that I have to do this with. These are some of the smaller accounts that I manage, but they're managed no different than the bigger one. So I keep pushing this home to people. You have to understand how to manage your money with small amounts before you can move on to the big stuff. And people, if your ego is too big and you know too much, you're not willing to listen to sound advice, do not get into a market. It's not understanding the market, it's putting too much money into the market. That FOMO or that YOLO play that everybody wants to make. It's in the back of everybody's head. You have to get it out of your head. You want to spread that money around. Think of it this way. I came up with a pretty good analogy. If you've ever been to like a local flea market or whatever, and you just take a look around and you see the guys that have the experience, right? What do they have? They have multiple tables and they've got multiple products laid out there. Of course they're used, secondhand, whatever, but what are they doing? They're charging less for the items that maybe the guy around the corner, he's got like 5 or 6 items, but he's trying to make a killing on them, right? So you're like, yeah, this guy over here is selling it quite a bit cheaper. I think I'll go for that. So look at your sell limit as the closer you can be to your mean or your average cost, the faster you're going to get rid of it. I mean, it's just common sense, right? But people want to say, yeah, hey, I bought this for $50. I want to make $100 off of it. Okay. You're going to be the guy that's around the corner that's got that one item. And maybe you get somebody that buys it. But you'll be sitting on it for a long time waiting for that. You might have to go there weekend after weekend. It might be a couple years before you get that one guy to buy it because it may just be a supply problem. Somebody comes around the corner and says, hey, I got $100 and I'll take it off your hands. And you finally get paid. Meanwhile, the guy that's around the corner that's got multiple items, he's selling his stuff every weekend. He's turning it. You have to make occurrences. The buy and hold stuff, I mean, you get a couple million in your account, talk to a financial advisor, spread it out a little bit. You can just sit and collect dividends. You can make 5-6% on your money, $50,000-$60,000 a year on a $1 million account. You don't have to do anything. But that makes for a pretty boring, existence. You can make that money work for you. You can double that, get up to 12%. You can make 1% per month on your money. Just multiply it by how many months. That's how long it takes you to double your money. 100 months. Don't make it more complicated than it needs to be. But every time you lose money, meaning you take a loss, you're that much further. And people like to say, well, if you use leverage, you can get there quicker. So you can go further away from it quicker too, because it's a double-edged sword. I haven't seen too many people that can consistently make 3, 4, 5, 6 times the amount of money to cover that big loss. If you're taking small losses all the time, what's happening? It's eating away at your capital. Now, do I know where the market's going? I haven't got a clue. Don't care. I manage money. I don't guess. I don't look at what's actually happening in the market. It doesn't make any difference to me. Market can be up, it can be down. I'm managing money. And that's what you need to do. If you don't understand how to manage the money, you can pick and choose stocks all day long. And you hear it all the time. Oh man, I bought this at 5 cents and now it's $1,000. It's like, okay. You get that 1 out of a million or 1 out of 50 million people that are actually investing. Take the smart route. A lot of people out there refuse, I guess it's in our DNA, I don't know, but there's probably a study been done on it. How many people, if you gave them $1,000, how would they manage it? I mean, most people are like, hey, I want the new iPhone, right? If you can even get an iPhone for $1,000. But that's the thing. If you're debt free, maybe you can, like what have we made so far this month? Just on these 3 accounts here. Okay, so we're up to 1,000. Let's highlight that there. Okay, we're up to 1,000. That's combined, right? You get 3 accounts, cumulative profit. That's from trading, and cumulative profits from dividends. So we just got paid today $85.54 for doing absolutely nothing, right? Just managing the positions, managing the money. Don't get out soon. Don't take a loss. Don't be too aggressive. Like look at most of these positions. They're very small, right? A lot of it has to do with the size or the value. $26, 12, 69, 2. You could see that the positions are smaller, and a lot of it correlates to the price, but there's other factors that go into it. I'm trying to find that PNW. Where are we at? Oh, right here at the bottom. We're just looking down through. We got 23 minutes before the market opens, so we're just looking to see if we have any spikes anywhere, or we're going to readjust a position if we needed to. And readjust, when I say readjust, I'm saying, if the price over here on the right, now this isn't always accurate. Sometimes you'll see this thing way up here and it's just the spread value. The market makers are messing with people, right? So people see that and they're like, oh, hey, I'm going to sell, and it's actually still down here. So that's why sometimes I look at it and it's like, I'll just sit on it. But 99.9% of the time, I'm going to take the money at the limit that I placed. If it opens up above it, I'm going to get that, somewhere above the price. Doesn't matter. I'm still taking profit. I'm after occurrences. I don't care, a couple pennies here and there. It doesn't matter. Now, when you start getting up into the larger size accounts, I really pay attention. You get up in 500,000-600,000, you're working quite a few shares per position. It makes a difference. Okay, those couple pennies. So that's where you really have to be accurate. So if you're accurate down low, that'll carry over into your trading and your investing as you go along this journey. But when you get ready for retirement, you can do this on a part-time basis. You don't have to worry about Social Security. That's just gravy. Social Security coming in. Yeah, okay, I got my $2,500 this month. Yeah, but I'm making $10,000 a month in the market. And people you don't seem to understand. 1.2 million is 120,000 a year at 10%. And people don't think it's possible. I know there's people doing it. But they want that quick fix. They want to gamble. They want to roll the dice. You want to roll the dice? Go to the casino. I go to the casino. It's been a long time, but of course I never lose when I go to the casino. I always win. How many times have you heard that? Now here's a good example. People would say, well, why did you sold it last week and then you bought it Monday? Right? I actually bought it higher than what I sold it for. Well, if you follow me any at all, you'll understand that that's an occurrence. I don't know where this price, if it's stopping here and coming back down, right? But see, that I took the profit. It's like I put a question out there the other day. So you bought a horse for $20 and you sold it for 30. So you made $10, right? So then you bought that same horse back for 70 and you sold it for 80. You made another $10. And everybody's saying, well, you're just even. I was like, no, I'm up $20. People don't get it. They, for some reason, they say, well, why would you, buy that again and just sell it when it's higher? I mean, it makes no sense to me. I was like, look, I took the $10. Well, if it goes down again, look, you got to get that shit out of your head. You got to think growth. The only way you're going to grow your account is if you sell something. If you don't sell it, you don't realize it. You have no idea if that price is going to stay there, if it's going to be down here, if it's going to be up here. There's only three directions it can. Well, there's two directions it can go, and it can possibly just stay still. Not likely. But ideally, if you had, if you could buy 1 million shares, all you need is a 1 cent move, right? Good luck trying to buy 1 million shares. It just doesn't happen in one fell swoop unless there's enough volume. You look at any of these dividend paying stocks, it'd probably take you a couple weeks to get 1 million shares. That'd be $42 million on this one, right? I don't even know. I don't even think like that. I mean, you don't see, the big investors in the world buying and selling millions of shares per day. It takes them months to get in. Well, say weeks on millions, but if you're buying $1 billion worth of something, it doesn't. It's not like a click of the button and they're in. It just doesn't work like that. There has to be something for sale. There has to be enough for them to buy. There has to be enough. And that's probably, somebody like Buffett, when he's looking at it, he's just looking at the available shares in some companies. Like, yeah, okay, I'll buy them all. I mean, that's the problem he has. That's when he's saying that the individual investor has a retail investor has a advantage over him. It's because he can't get his money into the market fast enough. Because it'll move against him, like it'll move up, and his position is actually losing value because he's buying in such large amounts. Now it's going down. Yeah, he's improving his position. He's DCAing, but you don't want to DCA on the way up. It's just making your position worse. That's his point. Like when you get into something, just basically say, "Hey, I'm going to buy this for life." So I mean, yeah, it's money. Okay, hey, this one here, OMF. I'm going to buy 2 shares. I'm going to invest $108 in this, and I'm going to own it for life. The only way I can get rid of it if it goes here to 71.50. Now you're looking at that spread and you're thinking to yourself, it's like, okay, what are you talking about here? It's like, well, look at the dividend amount here. This is kind of an outlier. This came up on the scan, and I'm like, okay, $15.80 per year per share. That's like, okay, well, it's only allowed by the scan with this size of account to buy 2 shares. Okay, so it's $108. Well, at $15.80, it's going to pay me close to $4 on what, 5.16 or something like that. So I mean, that's a high percent. That's like 23 or 28% on your money. Divide that by 4, it's 7%. You can get that in a couple weeks. This is the type of stuff that I look at, and I laugh because there's people watching this. I mean, I'm not the only one doing this. But look, it went from 45 cents to $3.95. What's up? Now if that continues, great, But if not, guess what? If this dividend amount comes down, this sell limit will come down to reflect that. So if it ends up being 45 cents, multiply that by 4, that's $1.80, right? So it'd be $1.80 above this plus the dollar for the commission, and we're out. If it comes up and hits it, we're out. I'm assuming it's probably going to be. I'm just going to annotate this on the chart. Let's work it out. Let's just say it's $1.80, and we paid what, 55.75 plus $1.80 plus the 50 cents for the commission, so 58.08. We'll just go 58.10. It's like this is probably where it's going to end up. I don't trust that, but it's just the way it came up. So we're gonna play by that. So 58.10, right? We'll just put that on the chart just for future. You think in the future what could be, then you make better decisions. Okay, so 58.10, we'll just keep that as a reminder. So if this drops back down to 45, maybe this is just an outlier. I mean, it looks like November to February, looks like, you know, quarterly payment. Maybe they truly are going to pay another $3.95. I mean, that's what it's showing. If we go over here, OMF. All right, we'll look over here. It says it's going to pay on $3.95. I don't know if it's going to happen. I mean, anything can happen here between May 27th. So you got another month. If it's going to pay me 29.3%, that's just over 7% on my money. Where are you going to get that in a couple weeks? And what do you have to do for it? Nothing. But see, here's where people make the mistake. I'm going to go all in. You know, I got $5,000 to invest, or let's say they got 10. So they buy 100 shares, 54, and it drops back down. But the price keeps going down. And now you're stuck making the $1.80. Now there's nothing wrong with that. But, or $1.56. Yeah, so let's see, look here, it says special, February 17th, special. So I would assume it looks like it's increasing, but at 45, I'll take the $1.80, then I'll readjust my my strike and get out at that 58.10. But you wait for it to come out. I mean, if it's above it, by the time that happens, then I just close the position. Always take profit. Let's take a look at the mosaic. We're coming down. I got about 12 minutes. Is that OMF at? See what's on the negative side here. We got AIG Insurance Company. I have no idea what TRTN is. Don't care. CIT. I think it's moving up a little. Everybody knows what TLT is, 10-year bond, or I'm sorry, 20-year treasury bonds. K, quarterly pair. Main, WBS. That's funny, on this came up on the scan, but you know, on the scan we can't buy it, right, because we're already in it on this particular account. But if we go over to this account, let's see, which one is it? Oh, it's not. We didn't pick it back up yet, but we had bought and sold it yesterday because we had a drop down, and now we're trailing it, right? So it's back up to 54.09. We're trailing it by $1.50, but we're already in and out of that trade. So we look at it. Where is it at? Yeah, you can see it there. So we bought it here at 8:31, and then we sold it half hour later for $4.36. So just a quick in and out, but we're still in the game, right? Because it's on the scan. So we just trailed it. We'd like to be in it again. There's volatility there. You can see that. The LTC. I don't know what LTC is. What is it? It's a property company of some kind. And if we look, I think it's on the scan. Take a look. No, it's not on the scan. But yeah, there's a heck of a lot of stuff going on. And we like that volatility. But this is, I mean, you don't see these moves every year, especially in CEFs. CEFs are great because they, provide you with monthly dividend payments, which allows you to, if you have enough money in there, you continue to buy more CEFs, and it's a snowballing effect. And once your account gets big enough, then you start going for more occurrences on larger things. Once you get up over the 25,000 mark, where your pattern day trading rule, it's such a stupid rule, but people have to be, you got to have these rules because a lot of people don't know how to manage money, and that's what gets them into trouble, because they're like, hey, I've only got 10,000. I'm going to try to trade this. And next thing you know, they lose the 10,000. They're blaming everybody else because they're clicking a button. It's really easy. It's easy to hit the button. That's the danger for any new trader. But if you've got any time in this at all, you'll understand that the more boring and the slower things are, the better decisions you're going to make, and the more money you're going to make, because you're not losing any money. That's the name of the game. If you don't lose money, the only other thing is you don't make any money, or you make money. So, I'm okay with a company that stops paying dividends, kind of like BA. Let's take a look at them. I hadn't looked at them in a while. So BA is Boeing. We had owned them at one time in the past. See, they still don't pay any dividends, but they just got a huge order, like 100 planes or something, like last month. But see, the money hasn't, you got to wait about 90 days until that money starts flowing into the company, and they start, people start taking delivery of the planes or the corporations, and that money starts to roll in. Then they start reporting earnings and everything else. So once they start reporting, now you can say to yourself, well, why wouldn't you be ahead of the curve? It's like, because I don't know where the price is going to be. I want to know what kind of dividend I'm getting paid. Like that, maybe it comes out that they're only paying 10 cents in dividends per quarter. Well, I'm not interested in owning it, especially at these prices. I mean, what am I going to make? 40 cents? I mean, sure, it all adds up. I mean, if that was the only game in town, I'd be all over it. But right now, my minimum is $1.20 per year per share. If it falls below that, I'm not interested in it. So my scans reflect that. $1.20 is 10 cents per month, not 10 cents per quarter. You're thinking, oh man, you're not thinking very big. And it's like, okay, well, dividend payment, the highest dividend payment that I've seen is at $15.80. And we know it's probably not real, because it's just one payment. It kind of throws off the equation in the computer. So you're like, yeah, okay, well, if it is real, then I'll partake. If not, it's no skin off my back. It's still paying that $45, $1.80. That's well within my my rules, and I will take profit from it. And I'm willing to buy 2 shares for the rest of my life and sit on them. You think, it's like, well, when are you going to buy some more? It's like, well, the max shares, where's that OMF? Let's go back to that OMF. Nope, it's not on that one. Let's go to the one where it's at, where we can see it. OMF. No, we don't even have it on there. Let me get it on there. So the max shares are 26. Is that right? Wonder why that only bought 2. See, that's interesting. Maybe there was only 2 available for me. Either way, it should have bought 3. So for whatever reason, we only ended up with 2. I'm not going to go back in there and try to buy more. That's the whole idea. When it comes back down, if you make a mistake, that's a small mistake, right? We're not worried about missing out on 1 share. Sometimes that happens if there's not enough volume, but I think that was probably me just putting in 2 shares instead of 3. I don't know. When things are moving fast, like yesterday was kind of crazy. We ended up with something like 25, 26 orders. I try to get them as fast as I can. But still stay calm. We got about 4 minutes. Nothing else is really moving. We're just waiting on the opening now. PBO, SLV, that's another good dividend pair we've had for years. It just paid yesterday. Well, went ex-dividend yesterday, so it was like, it was 18 cents or something like 70 bucks. Now this is this other one I was talking about, rights offerings that came in on the 12th. So I'll have to go, they'll eventually send you an email and saying, hey, you got to vote, you know, whether or not you want to buy the shares, and they're going to tell you what you can, how many shares you can buy. It was based on how many you had at the time on this date, and they'll give you a discount on them. And that's fine. I mean, if you want to do it, they're just diluting their shares, that's fine. But you see the price comes down when they do something like this. And we already had a 50% retracement in here. So we were like, okay, because the max shares went up. Go back over here. So our max shares are 186, so we ended up buying another 19. I think we were in the 150s or something. What that's going to allow us to do is just, you know, another 16 cents multiplied by 20, so it's another $3.20 a month. Now, because on the rights offering, whatever the difference is, right? So we got 186 to 175. If, you know, I don't know if I'll do it this week or next week, whatever. Whenever I get around to it, if the max shares change next week, let's say this goes up to 200, right? So we'd be 25 away. Well, that's how much of the rights I would buy, 25, and that make that an even 200. So that would obviously lower our average cost, right? And would lower our target, right? It'd be the same difference, you know. What's the dividend amount? $1.92. Well, that's what we'd be targeting. This is real simple math. I mean, I've been doing this for years. Just decided to start showing people because, I mean, if you're not doing this, you're missing out. I mean, when this market comes down, we're just going to be buying more. I mean, this isn't rocket science, but you have to make the decision when you're going to buy more. Right? We already know. I mean, if this market comes down, I know I'm buying at 65.58. That's going to be like a $12 DCA. So this comes down in half. My target price is the same distance. You just move these 2 lines down to halfway. And then if you buy down here, then you just move it to the 50% mark. And guess what? What's that move? 50%. We just keep doing this over and over and over. Okay, so we already bought something else this morning. PAG. P-A-G. What was that? Yep, that was on the list. So you can see it highlighting here. PAG, bought at 8:30:02, so 2 seconds after the open. So we go down here, do the exact same thing every day. We look, see our average cost is. You can see it up here. 87.32. Add the 172. We add 50 cents because we do have brokerage fee commission. If you're on E-Trade or any other platform that doesn't have a lot of functionality, it's zero fees for you. Alright, so Starbucks is on the alert. We'll check that out in a second. So PAG, what did I say? 89, so we'll go 55 on that. 89, 55. Is that right? Just double checking. Okay, so we're looking to get 2% out of it, right? So it's $1.72 multiplied by 2, it's $3.40. I know it doesn't sound like a lot. You just got to be patient. You'll see how it works on these smaller accounts. Let's just see what's moving here real quick. Okay. It's probably going to be... I have no idea where the market's going. Don't care. I'm just managing the position. If something happens, there's so many millions of people working their accounts, different strategies. All right, let's take a look at Starbucks. Which one is that on? All right, Starbucks. All right, so do you think this is the top? Do you think this is the bottom? So what do you start doing? You start looking at other charts, right? No, well, we don't do that because charts are meaningless to us. Right now, the price for Starbucks is $116.57. If you want to buy it right now, that's what you'll pay. If you want to sell it for more and hopefully somebody buys it from you, you can do that. All right, how did we get off of that? That's interesting. Go back to Starbucks. Let's see where we're at. Okay, so we're gonna, looks like max shares are 20. So we're gonna add 20 to the chart. Looks like we just bought RHI. I think that's a, I'm not sure, I can't remember. No, it's a 203, so we're gonna buy 2, right? Because that's 10% of max shares on this size of account. So we're gonna trail it, just because I like doing trails. Not a trailing limit, a trail. And I'm just trailing it by 183. That sounds about right. Yeah. Yeah, I'm going to move that a little closer. Boy, it's bumping around pretty good. I need it to be a little lower. Yeah, there's a big spread in there. That's why I'm not getting the movement. I need it a little lower than that. I'm not afraid to get it up here, right? Because I can always DCA it down to that 50% mark, depending on where it buys. This thing might crash, who knows? Yeah, there's a big spread in there, and that thing is moving. You got to remember, they're watching your positions, and when you get outside their expected move, their algorithms are watching. That's one of those ones where I'll probably, oh, there we go, got a down move. Good deal. And so we're locked in there. That's what I was looking for. Now we can be like, how far did that thing get down? Let me go back there. This is like nitpicking right here. Okay, I'll show you something that I do. Low 116.37. Yeah, we're within the boundary. That's good. All right, let's go to RHI. Will we buy that on this one? Yep. So RHI, it's right up there at the bottom, 83.28. Do the exact same thing, right? Because we're managing money plus 50%. We'll go 85.35. So we're going to close that position. We already know what we want. That's it. We're spreading our money at 1.8%. Still better than the bank. Once the bank, let's put it this way, once the bank gets over 1.2%, guess what? I don't buy anything below 1.2% return. If you follow the logic there, you'll understand how you can make money in these markets, and it'll never run out. You just have to be patient. So let's see. Gotta check another one that came up on the alert. LNC. Let me put in my lines here. You can probably see these. If you don't see these on my charts, then it means I forgot to put them on, or it's already hit them. Usually you'll see this in a downward trend. That's all that a chart is good for, is, you know, helping you decide where to, you know, buy. All I do is to put an alert in here when it gets close. Otherwise, I'm trying to take profit right there. The only time I can buy now on this particular product is at 65.73. That's it. It's a done deal. It's in the account forever. All right, what's the other one I'm looking at? LNC. LNC. Let's see what that one's showing us. LNC. Is that right? 19? Now it's up to 21 now. So see, this changed. We go by what the scan tells us. So 21. And so we can go 2. I'm going to buy 2. We're going to trail it. We're below our mean, which is good. If you're wondering what these lines are on the side here, these are pivot points. We use these pivot points just to make confirmations. You see that little green one in there where my cursor is? Try to get that line. It's like 64.26. If it's definitely below that, I believe in things returning to the mean, which means coming back up. Okay? And if we know that we're using the close as our mean, then we're that much further away from it. So my idea is that we'll always come back to the mean. It's not 100%, but that's the theory, right? So we got trail, and we're going to go, what do we got here? Looks like 191. Go a little less. There we go. All right, so we're in. And that's all there is to that. So, you know, you can go over to pending, and you can look at all your positions. you know, what's following what, you can see our trails in here, right? Your limit orders, there's another trail, another trail. These are all orders that are eventually going to hit. This may have been from last week. Let's see. No, it's from this week. LNC, we just put that in, right? AXP, I think that's from last week. Yeah, let's take a look at that, because that one's been on there for, I think it's from last week, but let's take a look. But it's been dropping, right? Yep. Yeah, I don't see it. No, it's on this week. If I can get my, it's on this week. So highlight that, because eventually it's going to be, eventually it's going to be taken out. And that's fine. That's what we want to have happen. ACV, it's another one that's on, you can see down here, so 50% retracement. It's actually, it's so far away right now, we can actually close this, because it's probably not going to come down like in a day, and we can just have that money not sitting there. You know, it's only 100, 180 bucks waiting to go into this account, but we won't worry about it. We'll just leave it up there. It's not like we've got a ton of orders in. Okay, FANG is definitely on. Okay, so we'll take a look at FANG. Oh, guess I need to add the Fibonacci lines to that. I use that term loosely. I don't use Fibonacci the way other people use it. It's just a tool for me. It's finding the 50% in that 6-month window. Okay, so FANG. Lost my place. Okay. So FANG. Still only paying, it's only got, still at 13, this much longer. Interesting. Oop, I meant to change this. Okay, so 13, put that over here. And FANG, so we can only do one. This one doesn't pay much, but it's a mover and we get a lot of occurrences off of it. So we play the game. Just stick by your rules. Now we just got to find the, I'm going to go $1.50 on the trail. Easy, right? So all it's got to do is come down a penny, and that comes down a penny. You can see it just moved down, so it's at 41, so we know we're locked in now. If you have any questions at all on how these trailing stops work, either continue to watch it, because I put in quite a few of them, or ask a question. Don't be shy. Ask the questions. Leave a comment. I'll get back to everybody. So we got some that are moving up. Whether they hit or not, who knows? This one's only got one, so it's going to pay like $4.24. We haven't had any sells yet today. Now what's the overall market doing? Well, Nasdaq's moving up. That's moving up. You never know, right? That's why you don't guess. Who cares? You hadn't heard me talk about direction or nothing. Doesn't matter. Let's go over to Mosaic. Get a better idea. See if we can get this to, there we go. Looks like CLM. Now you notice the move is 27 cents up. All right, we bought it somewhere in there, but it's just based on the number of shares, or it's based on max shares. So remember I told you, I think we can go to 196 or something, so we still got more room, but we have to let the market come to us. We don't chase it. We don't go all in and say, oh, I'm just going to put all my money in right now. You have to make sure that you're protecting yourself. Protect your money. Don't get too crazy. And the longer you're in some of these positions, you'll see the ones that, you know, have gone against you. Look at all these high, and look at the ones that move the most, right? And these ones, you see max shares in majority of these. Some are over max shares, like this one, 500, you know, like that's way over the max shares, but it's been down for so long, but it's still paying us 48 cents, right? We don't buy any more of it. It's just stuck there. Just happens to be at a round number. This one, 310, it's only paying 76 cents. But if you look at,
partially filled.
I wonder what that one was. I don't know if you guys heard that or not, but we'll see. We can look on here. LECO, yeah, kind of partially filled. So this is what I'm talking about. Sometimes you don't get fully filled because there's just not enough. So you can look down here. So we have one left, right? And then when we look at it, because it's an expensive stock, right? So it's got to come back up here and hit that 126.15. There it goes. Okay. Now it's got to paint it. Somebody's got to pay me. Just because the market makers have moved that price up there, the spread, say it's 125 to 192 to 126.15. My order's in at 126.15. It should hit now. Well, if the bid,
order filled.
There we go. Once the bid is above or matches, then you get your money. So you see that live, how that happens. Okay, so LECO, we can write that down as a sell for the day, right? And you can go in here and just clean up your charts, move all the Fibonacci. Okay, is that on the scan? I go back, look at my scan. Is it something I can buy again? It's not on the scan. So we don't worry about it. Okay, you just leave it alone. It may show up on the scan next week, who knows? But you just keep doing this over and over again. You don't have to sit here all day watching this, you know. Once I'm done here at 10 o'clock, you know, I go in and manage all the other accounts. You don't have to stress out because it's not moving that fast against you. When the market starts, when you start getting orders left and right, you have to be able to be calm and not make mistakes, because that's how you lose money. Like just, you know, fat finger plays. But it's going to be interesting. A lot of people say, well, your strategy when this market crashes. And I'm like, okay, I've been hearing this for close to 3 years now. And the whole time, okay, there's FRT. Okay, so let's go take a look at that. That's another one of these that's just moving up. Okay, another 429. Okay, you do this 1,000 times, like 1,000 times a year, multiply that by 4, there's $4,000. Now, they're not all, you know, you can get some for $1. You look on what's winning, $1.78, $14.85. But these are all based on the size of these smaller accounts. When you get up over 100,000, now you're doing 20% of your max shares. What happens? You just double what you make. If you're making $1,000 a week or $1,000 a month, now you're making $2,000. That means once you're over 200,000, now you're making $3,000 a month. This is how you're going to make money consistently. 1% per month should be your target price or your target profit overall, right? That's in a good market. Now, if a market's crashing, who knows? You know, all you're going to be doing is getting dividends. So whatever your overall account portfolio tells you, look here, this one's paying 9.41%, right? If it does nothing and the market crashes, I'm going to get paid right now 9.4. If the price of the market is going down, or the prices, your values here are going down, what's going to end up happening is this value is going to increase. So it's kind of, dividend yield is funny because it can tell you something that's not entirely accurate. What is accurate is the amount of dividends that you get paid. The percentage changes on the, you know, the actual price. So if the price moves up, your dividend yield goes down. If the price goes down, your dividend yield goes up, if your dividends stay the same. So that's just all you really have to focus on. So let's go back over, what was that? LECO. And that was on this account here. Let's clean up the chart. Yeah, so it wasn't on there. I think we got in somewhere in here. I can't remember. Let's take a look at Mosaic and see what else is actually moving. The nice thing is, once you understand how this works, this is a 30-minute a day task. It's like making your bed or taking a shower or whatever. You get in here, all you have to do is put your orders in and sit back. You know, but the key to this is managing your money. It's not so much what you're buying. Do not listen to news. You don't hear news going off. I'm not quoting anybody. I'm not telling you what to buy. We're looking for stocks that are paying us dividends. This one's coming down. Okay, here's a perfect example. We bought way up here, right? Do I care? No, right? We've got, what, three shares involved in this stock. And what's it pay? $1.60 per year per share. So when this comes down, hits this alert, we're going to put an order down in here at 42.26, and that's going to dollar cost our average our position. We're not going to sit here and say, well, every time we see a red bar, we're going to buy something. What is that? This means nothing in the past. Okay, all we're doing is we're looking at a 6-month. If we squish this down, this is what a 6-month window looks like. You can't see these bars off to the left, right? Or the prices off to the left, but this is what it looked like before. So 100% retracement in a 6-month window would be 23.61, right? So the values are going to be different for each stock. The whole idea is you have to have something to go off of, right? But I found, okay, we bought SCM. Let me finish my thought here. So when we come down here, we're going to buy another 3 if we're still at that level on max shares. You always check your max shares against your position. So let's go back over here, SCM. Okay, here it is down here. Before we even look at a chart, what do? We manage our money. 1351 plus this one is a CEF. So it falls outside of our $1.20 per year per share because it's a CEF. It pays monthly. So we add that, and what do we got? 12. So that comes to what, about 8 cents. All I'm doing is covering the commissions. So we're going to go 14.60 for a close on that. Right? Then we can look at the chart. 14.60. Okay. So this is going to yield us 7.4%. You can see it's paying us 8 cents per month per share. It's nothing to squabble at. You just got to think big numbers when you start getting up into the larger size accounts. So you're like, well, that looks like a top to me. It's not going to go any higher. It's like, okay, well, that looked like a top right there, right? And that maybe looked like a little bit of a pull. I don't care. All we're interested in is making money. I don't care what the charts say. Manage the money, manage the position. If you don't have too much money in any one position, you can't get hurt. If this company goes out of business tomorrow, you lose how much? $162 out of what's the size of the size of the account? 66,000. That's less than 0.5% of your account. You can't lose. All right, so here, in the meantime, what are you doing? A lot of people don't get this part either. It's hard to get through to people. You bought it at $13.52. Let's say, what is it, 12, you're going to make, say, $1, right? So now your average cost is actually down here, 13. Just take $1 away from it, right? If you had one share, now it's $12.52. But you got 12 shares, right? So this, you keep taking away, and your average cost keeps coming down. But we don't even follow that because we know that's just happening. But where's your cash go? It goes back in here to your cash account, right? Bring it down to the bottom. So we got 16,868 to go back into these positions. All we're doing is cycling this money. It's kind of like the bank loaning it out. And all the people that don't understand interest pay it. The people that understand interest earn it. So you're one of the people that are earning the interest versus paying it. So let's look at some of the others that are kind of on the move. Let's go to Mosaic because it's easier just to look and see. So you got about, looks like about 30 that are down, less that are up. Doesn't mean a heck of a lot, but what I look for are the ones that, are showing $1 or more in moves. And we can say that there's more on the downside. VLO, that's an oil company. Valero, Medline. What's this one? Oh, Capital One Financial, I think. I think that's what that is. HFC. So I think you get the idea. And if you don't, all we're doing is managing. We're not guessing. We're not talking about, what CEO got busted for smoking crack. It doesn't matter. If the company is making money, it's paying dividends. Otherwise, it's a growth stock, and you're not getting shit for it. You want to sit around and try to make money off of Tesla? I mean, your guess is as good as mine. Let's take a look at Tesla and see how you can make money off Tesla, right? There's a lot of people trying to make money off Tesla, but what they're doing is trading options. Very dangerous game. So, okay, I can buy, if I look at this account and say, okay, what's the max shares on? Let's just say it's 4 because it's high, right? It's going to be in the low range. I'd have to go through and compute it all. But let's just say you can only buy 1 share. Okay, so if you want to make $100 on this, it's got to go to 830. So what do people do? They look at the chart and they're saying, hey, it can go there because it's been there before, right? It's like, okay, well, it can go down here. It's been down here before too. So what are you going to do if it goes against you? Well, I'm just going to buy another share when it gets down here. It's like, okay, well, what happens if it goes lower? You're not making any money in the meantime. You're dependent on this stock price to go up. From the second you buy this, you basically are saying, I know it's going up. I have no idea where any of these stocks are going. All I know is I'm keeping my price based on the dividend amount, right? If this dividend amount was 20 cents, my price would be right here. But because it's what? 228, that's how far away my sell limit is, 29.30. Okay. This is the focus. So I'm in this for life. If this price comes down and strikes here, I'm going to buy more at the max shares. Sometimes I forget to put the max shares on here. So let's see, the max shares are 111 shares. Let's put that on there. Now this max shares change from week to week in some cases. There's a lot of variables that go into it. So it's just something you just pay attention to, you know, when you're making your trades. But you don't have to worry about these. So now we look at how many have actually traded and say, well, you can't make any money doing that. And it's like, oh, okay. You keep thinking that. So we got all these buys. If you don't see a number in this column, realized profit and loss, these are all buys, right? You can look over here, bought, sold, sold. These are occurrences. Each buy is an occurrence. The other side, it's only half the equation, so you're 50% there. You get the other side and you start making these hits. You start draining money out of the market. Now, of course, you're limited with this system by the size of your account. And it's only in your best interest if you cap how much you're going after on each occurrence based on the size of your account. If you're trying to go swinging for the fences and you've got one stock that you're just in love with, it is going to beat you to death. It's going to take your money. And you know, if you're disciplined enough to say, okay, hey, I got $60,000, I'm going to buy this one right here, and I'm going to make 7.7% interest. Hey, I haven't got a problem with that. That's a good strategy. You're going to sit on it, and you're just going to make the money. But what are you going to do with the money? It's going to go into your cash account, right? Don't make the mistake and do drips, dividend reinvestment plans, because what ends up happening is when the price is rising, you're making your average cost go up. It hurts your position when the prices are accelerating up. But you're never going to partake in profit. Han, that's Honeywell. Check that one out. Okay, so Han, let's take a look at it. Which one is that? Let's do it on this one. All right, now, is this an all-time? This is the question you have to start doing this on a regular basis. Ask, is this the high? Is this the low? And then you ask yourself, you say to yourself, I have no clue. You have to keep saying this to yourself because nobody knows where this is going to. This could be $1,200 a year from now. We don't know. It could be zero a year from now. We don't know. But what are we doing in the meantime? We're collecting this dividend every quarter. If we don't collect it within a week, a month, or a year, we get money. We just don't put all our eggs in one basket. So yeah, it's an expensive stock, right? And so it's probably, what's it at here? Yeah, it pays a dividend of $3.72 per year. It's 1.6%. Now, obviously, if the dividend or the price comes down, that yield will go up. But we're looking at a max shares of 11 on this one. So I want to be able to manage this thing if it goes down to $5 and still make money. Right? If it's going down that much, I guarantee it's going to stop paying dividends, right? So you're not buying anymore. That's the rule. You just sit on it. A lot of these companies that end up getting in trouble, like BA, they'll eventually start paying dividends again, right? Because they're not going anywhere. They've got enough money. It's just for whatever reason, maybe it's a lawsuit. Who cares? All you got to know is if you have max shares of 11, what's the most amount of money you're going to have in this company? Doesn't matter, does it? So Han, so let's go, we're going to trail this by $3.42. One share, trail, based on the size of the account, and 342. Okay, so now we're in. I just like trailing stop. I have other strategies on how to get in. You could just buy on this limit pullback. and people do that, but I like to see if I can gain more money out of it, because I do have a ton of positions spread across like even more accounts than what you see here. But a lot of these orders I put in, you know, on the weekend. Once I get the scan together, then it's just easy. You put your orders in, you sit back, and then you just manage your accounts. I'm not sitting there looking for trade ideas all day long like, oh, hey, what did so-and-so say? I'm not on Twitter thinking, does this guy know what he's talking about? No, I'm just managing money. So SCM's already taken care of. I'm always trying to make sure that my positions, like I go down through here and it's like, okay, is this one, like this one here, it's down $272. It's only $107 worth of value. So let's look, this is, if you want to call it a loser, you can call it a loser, whatever. It's not paying dividends. It's just a floater at this point. So it had a max shares of 182 and long at 33. This is a oil company. It's a royalty trust, but it had to do with oil, and it's British Petroleum. So, and its overall stock is down. But keep in mind, this thing can start paying dividends at any time, right? But otherwise, because it's not paying dividends, it's not on the radar anymore, and it's not going to come up on the scan. So I got $380 just sitting in there. And I think the reason why it's so low is because, let's see, 1152 is what we paid for it originally. I think this thing split, if I'm not mistaken. So it reduced the number of shares. I can't remember. But it's just something that just sits in the account. I'll never sell it. If it comes back and starts paying dividends, guess what? I got 33 and it starts paying me again. It's just, think about it as a vacant property. If you own some rental property and somebody moves out and you're not getting that rent for a month, that's all you got to concentrate on. Don't worry about the ones, you know, just don't buy the ones that aren't paying you dividends. You don't have to worry about it. You know, if you want to take risks, those are the ones you go after. But I would rather have my money working for me all the time, which this is doing. And then a lot of people ask me, it's like, well, all that money is just sitting on the sidelines. I say, well, how are you going to buy if you are just pounding all your money into the market? You can't. You're trying to make it on both ends. As the market keeps on rising, this value should be increasing, right? So when the market's coming down, this value should be decreasing, because you're buying as the market's coming down. You're getting better prices based on your account. You're not buying new positions on the way down. You're DCAing what you already have. Yeah, so you can see that the market's kind of, once all the buying and selling has already happened, then it just becomes kind of algorithmic trading on the institutional side. Yeah, there's individual traders like myself and others that we don't move the markets. You're fooling yourself if you think buying 100 shares moves any market. This all comes down to institutions. Institutions make these decisions. Market makers influence it. All we're doing is saying, okay, this is where we're at. And be under no illusion, they can see all these orders, right? And we're okay with that because it doesn't matter. Yeah, and all we're doing is making a last look through here to see what we got in this account, and then we'll make a quick go back over here. We're a little bit long today, but that's fine. BGB, yeah. But if you're new to this, really concentrate on the CEFs, and let me bring that up here one more time so you can see. This is what's on the CEF list for this week, and you can see all the yields here. That's based on the close of last Friday. That's what we base all our information off of. So you can see this one bought today, so we can highlight that. All of these are should be highlighted now, because I know these ones came in. So now these were all in on all of these. Okay, if they're highlighted, we're in. But we do this because these are high payers, plus the movement in these is quite a bit less up and down. So we need to get paid if you're going to stay longer. That's the way I look at it. And I always treat it like they're rental properties. So concentrate on these if you're new to it, and then that way you'll get a better understanding, because you'll see these coming in monthly. When I say monthly, you'll watch your cash account grow. Now at first you're going to be thinking, well shit, it's not growing very fast. Well, if you only have $10,000 to invest, it's not going to grow very quickly. Okay, and that's a given. So as long as you understand that, but it's better than going the other way. Once your account starts to grow, then you're like, okay, once you hit that 25,000 mark, then you can start going into others. Now, because I have experience with this is a small account. And I show this because it's important to understand that this overall account's only making 5.82%. But when you start looking at the number of occurrences, right, just double this amount, because that's actually what you're targeting, right? 5.82. If you can triple 4 times that amount, just multiply it by that. It just depends how many occurrences you have, because we're targeting this amount here, which translates to this percentage here. So each month I go down through it and I show everybody how much you can actually make doing this. There's no foolproof, way. Oh, we need to see this one here. It's not a game of chance. It's just the managing the money aspect of it. And I'm very OCD on this. I don't even have a closing order on it, probably because it came across on 2 different portfolios. So I'm just going in here. So again, EOI 1780. All right, so we go 1780. And we need to be able to see the amount here, $1.07. I'll make it $1.08, just round it up. And 17 would be equivalent to 6. So we'll go 17.90 for a close. All right. What did I do wrong there? Yeah, that didn't add up right. 1780 plus 108 plus 0.06, 1895. That sounds better. Sometimes I get fat fingered, right? So this is what I was talking about. See, if there's not a space in there, I know that either there's a problem. Well, see, LECO sold, right? So we know that we don't have to put an order in there. And what was I talking about? So EOI, so we go back and look. So now you see that's where the target price is. We got to put our alert in there just in case it comes down, because I don't want to sit here and watch this all day. When I'm done, I go do something else. I can finish off my, I can manage my other accounts, then I can go ride a bike, I can, do whatever I want to do. NUS. Yeah, we're getting some positive movement, but it is what it is. But that's it for this morning's session, because I don't see too much else going on. We've already got our orders in. These numbers up here mean nothing. The unrealized account means nothing. I just changed it up there. You can change this back so it's not confusing, right? And all we're looking to do is take profit. That's all this is, right? If it goes up and hits there, I have no idea if it's going to hit this. You don't either. So don't sit there and watch it. Just let it happen. Then you can come back in and look and see, what did I make? There's your profit and loss. Each platform is different. Learn your platform, whatever one you choose to use. Of course, if you're going to use Interactive Broker, just realize that you're going to have a commission on each side of the trade. I don't mind. I've been using them for over 25 years. I just get fast trades. I get filled correctly. I never have any issues with my accounts. I don't have money missing. Some of the good ones out there, TD Ameritrade, E-Trade. I don't know anything about Robinhood, but if all you have is a cell phone, you can use it on that. But there's lots of different options. But yeah, I went a little long today. But anyways, trade well and just manage your money. That's the key to this. But we'll call it there, and we'll talk to everybody this afternoon up on the close.